If you've already watched the videos on MT4, you'll be very familiar with the VRSI indicator, the volume relative strength indicator, which I'm delighted to say is also available for MT5. And if you have the quantum indicators, you'll know that through the dashboard, you can easily switch between the two. So it's your choice whether you use MT4 or MT5, but it is now available. And in addition, can I also point you in the direction of the video library for MT4, because I've done a lot of videos there on these indicators, and I didn't see the point in replicating it here as well. But I will talk you through the basics in this video as an introductory video, but there are plenty more on the MT4 library as well, because as you can appreciate, MT4 and MT5 are very similar in the way they operate. And the indicators indeed operate in exactly the same way also. So there's no difference. All I've done here is take a very simple example. We've got 4 time frames. We've got the 4-minute, the 6-minute, the 8-minute, and the 12-minute bottom right in that order. And we're on the Aussie yen. And we have our VRSI indicator, which stands for Volume Relative Strength Indicator, on the bottom of the price chart. It's very intuitive, and it has 3 essential components which I've outlined in other videos, but they are in essence this. First of all, we have the fulcrum, which is the midpoint between bullish and bearish sentiment. Very straightforward. Secondly, we have the colors. Brighter color signals strength. Weaker colors signal a diminishing in that strength, or a lessening of that strength, whether that's in the bullish phase where we've got bright yellow and the paler orange, or in the bearish phase where we have the bright blue and the slightly lighter blue. So that's the second component. And the third component, which is perhaps the most important, is the height of the bar itself. The terms that I've used throughout these videos are primarily pressure, because that's how we view the indicator. It's very much a pressure indicator. It's signaling whether we have pressure in the trend. In other words, has the trend got momentum? Because if it has, it's going to signal the fact that it may well develop over a much longer term, and therefore something that we can ride and take advantage of the full trend. And this is the key, because when the trend pauses and goes into minor reversals, what we call secondary pullbacks, those are the most dangerous, because they are the point at which you will want to take your profits off the table. And that's inevitable. We all have faced the same issues, and we have to find tools and techniques to help us overcome those issues and to give us the confidence to stay in and maintain the trend for as long as we possibly can to maximize our profits. Because ultimately, taking a lot of short-term small winners doesn't move the trading account forward when counterbalanced with those small losses, of which there are more. And therefore, the trends that we have to trade to take advantage of have to be, by virtue of that fact, they have to be larger winners. And therefore, we need to find ways to help us, give us the confidence to stay in through those pullbacks where we see what has been a very profitable move suddenly start to dwindle away quite slowly, perhaps with a little bit of increasing momentum. And we start to become nervous and we close out. And inevitably what happens is the trend goes into congestion and continues on upwards, and we're left stranded. So this is what the VRSI, one of the factors of the VRSI, that's what it's giving us. It's giving us a view, a very pictorial view, a very colorful view of the strength of any trend. And it does that by virtue of the height of the bars and also their color. And this has many parallels with our own underlying methodology, which is volume price analysis, whereby we compare volume bars one with another. We are constantly looking at the height of a volume bar. Is it higher than its predecessor? Is it lower? Is it well above average? Is it below average? How do groups of volume bars compare with price? And we are doing the same thing here. We are looking at the relationship of these pressure bars, that we call them, relation to one another, how they relate to one another. Are they rising? Are they declining? Are they a bright color? Are they a lighter color? What is going on in terms of the overall trend? And as you can see here, we see the trend rising, but gradually over time, that bullish sentiment on the 4-minute is waning away steadily until we get down to the fulcrum. But the bearish strength really only picks up right at the end of that phase of price action, where we start to see the taller bars begin to develop, and therefore we know for a fact we've got much stronger momentum coming in for two reasons. Firstly, because the color has gone to bright blue, and secondly, the bars are increasing in height and becoming more demonstrable. And of course, as you move through the time frames, you go out to the 6-minute, out to the 8-minute. Those have yet to exhibit that change in the shorter term sentiment that we see in our 4-minute time frame, where the bearish sentiment is already starting to get established, because that trend is much closer to the market interface. It's at the live edge, if you like. It's at the coal face. Whereas when we step back into our slower time frames on the 10-minute and the 12-minute, that sentiment has yet to reveal itself. And that is something we see in all time frames, because any trend change will start in your fastest time frame. And if it's going to be something meaningful, rather than just a pullback, it will ultimately ripple right the way across through our time frames out to our slowest time frame that we have under analysis. And that's a function of any trading, whether it's currencies, stocks, indices, it doesn't matter. It's a primary methodology for viewing how a trend develops throughout the time frames, and one of the main reasons we use multiple time frames. And as you can see in the 10-minute, the 12-minute at the bottom there, exactly the same principles apply. We've got strong downtrends with strong and rising bars, and we've got strong uptrends with the same feature. And then gradually, as those trends come to an end, we get down to the fulcrum and we rotate from one sentiment to the other. So there we go. Hope you've enjoyed this video. Lots more to come as always. See you in the next one, and bye for now.